investors vote on a compensation package for Elon Musk. And in that proposed compensation package is the mandatory goal of him delivering 20 million vehicles over 10 years. That means 500,000 vehicles every single quarter for 10 years.
It's a lot of big numbers. How does he get there without a low-cost EV?
Yeah, so it's really, really interesting. The other phenomenon of the quarter was that Tesla very quietly started doing advertising and marketing, which Elon Musk doesn't like advertising or marketing. You know, the story historically has been what was called parketing. In other words, you know, Tesla's brand was sort of self-fulfilling. People would see a Tesla and be like, what's that? I want one of those. But what I've heard from sources inside the company is after they experimented with ads on like YouTube, Instagram for their energy business, like solar and batteries, they saw a direct uptick in sales. So they took that and they were like, let's start doing cars. To answer your question, remember the future of this company is predicated on robotaxis and humanoid robots.
That's his narrative.
It's his narrative, but the board's too.
That's what I've been pitching since 2022.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Advertise the benefits of Tesla, how good it is to be able to use a battery while you're at peak hours from the grid and offset that to get a big 17 to 20% ROI on your energy bill with Tesla Solar. Let's freaking go. Come on, man.
$1 trillion compensation deal. It reminds you that they still need to be good at building and selling EVs to consumers to fund this future vision.
Absolutely, because conventional EV still make the bulk of their business. I mean, they have this energy business with the batteries, but that doesn't contribute to its bottom line the way that selling Tesla cars do.
Or selling regulatory credits to other automakers. So remember, ZEV credits have been a big factor in the bottom line because you're basically getting super high margin revenue for not doing anything. And that also, to an extent, goes away. So yeah, I find it really fascinating. But as a moment in time, yes.
Okay, I mean, we got to talk more about what this means with advertising because it's a game changer for Tesla, and we'll look at their numbers and their COGS and all that and what it means for the future of Tesla. But this is really, really exciting. Let's just listen for a little bit more and we'll talk about this. Keep in mind, we called the dip after this announcement in the Meet Kevin Alpha report that traders are going to have to exit this. So as this was skyrocketing this morning, I'm like, be careful. People are going to exit now. People are going to take their tendies. And they did. So make sure you join. Use coupon code DADDY'SBACK to join that and get that lifetime access.
At least here in the U.S. with the expiration of that federal tax credit. Let's bring in John McNeil, CEO and co-founder at DVX Ventures for more on the global EV market. We should mention John is also...
The EV market, like Rivian, Ford, GM, record EV sales, by the way, during this expiration. So the question is, like, what's next for the company, right? We'll talk about that.
It's a long-term story. It's not something that plays out quarter by quarter. Yet you look at what's happening in the U.S. and those federal tax credits, those subsidies matter quite a bit to U.S. consumers. How important are these federal subsidies to the U.S. consumer adopting EVs en masse?
I think, you know, now if you look at it, 1 in 4 cars sold in the U.S. is electrified. It's either a full battery electric vehicle or it's a hybrid. And so I think we're at the point where the market is probably ready to stand on its own. We've seen this. We've got the benefit of looking at Europe, who 2 years ago rode back subsidies.
Basically saying pull the support pegs out and let Tesla stand on its own. I agree with this. Again, the big thing is going to be what's going to happen with margins at Tesla. See, look at this. If we have X credit, we're still at 15% on X credits for Tesla margins, which is still very good. Now, that was Q2. They're going to, in Q3, have some more advertising expense, which is going to show up not in gross margin, but it'll show up under operating expenses. Typically, SG&A, right here, this is where you're going to end up dumping advertising. So there's going to be a little bit of complexity here in how they actually report these numbers and how investors look at them. But you will end up seeing operating expenses go up, as you have seen from, look at this operating expense increase from Q3 to 4 to Q1 to Q2. Some of that could be, though, because of R&D. And so to see that breakdown we could jump on over to the actual SEC statement. We should be able to see it here. Here we go. So take a look at this. R&D, yeah, a nice pickup in R&D right here, right? Almost a 50% pickup in research and dev. That's what we want. We want that research and dev increase. Not only are you getting more research and development tax credits as a company, which are different than your vehicle or manufacturing tax credits, but you don't really want to see SG&A go up too much. Hopefully Elon is keeping the business as efficient as possible, which because daddy's back, I think he is. You're still seeing about a 6.9% increase in SG&A here net. This is probably going to increase even more because of ads, but honestly, I don't think they have to spend that much money on ads. I actually think, and this is why, we made like mock Tesla commercials, not only with AI, and then, I got yelled at by Ryan Reynolds' attorney. That was entertaining because we made an AI of Ryan Reynolds pitching Tesla cars about how they're freaking awesome. Although we didn't use that word either. And then Elon retweeted it, and then Ryan Reynolds made an AI response video of Elon Musk pitching aviation gin, and then I got a letter from an attorney. Okay, so long and short, I've been really gung-ho about getting Tesla to advertise because I actually think their ROI on advertising will be huge. Because again, I'll just give you a few examples. Like, if this is Tesla listening, please, like, I want what's best for the Tesla community, for Tesla as a company, for Elon, because I freaking love the cars. Okay, you should see what I just got. I got one of these center consoles in the Cybertruck. I'll have to do a whole Cybertruck review. And instead of that dead area where everything keeps rolling around on the middle, I've got extra cup holders now and like extra storage. Oh, it's so cool. And we'll have to do a Tesla walk-around video. Comment for a Tesla walk-around video. I put a rack on the Cybertruck as well. It's great. But anyway, I'm so excited about it. So what Tesla needs to pitch, first of all, is that the ROI on using your batteries during peak hours basically pays for these damn panels and batteries even without tax credits. I mean, now you got an expiring 30% tax credit, but your break-even cost with the 30% tax credit's like 5 or 6 years, and then it's profit, man. Profit after that. I've had solar panels on the house that I'm in right now. They're Enphase, they're the IQ cells, so the German ones made in China, and Enphase microinverters. I've had solar here since 2016. I'm 9 years in, so I'm just like ROI milking right now. And there's no maintenance of this crap, So I'm just getting ROI every day. I'm running electricity. I'm getting ROI on these panels. It's surprising how fast time goes by. It's also kind of scary. But anyway, so like, I'm a big fan. Like, I'm a shill for solar panels and batteries. I kind of think Donald Trump's assault on green energy, with what he's doing right now. I mean, look at what the New York Times was reporting, and I know it's the Times, but look at this. Energy Department cancels hundreds of clean energy projects, mostly in Democratic states. $7.5 billion of Biden-era awards to hundreds of projects in California, Colorado, Connecticut, Delaware, Hawaii, Illinois, Massachusetts, Maryland, Minnesota, New Mexico, New York, Oregon, and Washington have been canned. All of those states have Democratic governors. So it's like blatant political favoritism, which a lot of these were projects that could have potentially had funding going to Tesla megapacks. So you have short-term downsides here, right? There are real short-term downsides, but let's list this out. So here's my take on the future of Tesla. Okay, so let's go ahead here. Let's just take a document here really quick. I'll take my SoFi versus Rocket analysis as a template here. So we'll go near-term problems for Tesla, and then we'll go with a long-term ad strat, because I think there's a huge ROI for Tesla on advertising, and they're just now starting to learn it. Okay, near-term problems for Tesla. So the 321 green projects canceled, will hit megapacks. Okay, then you've got Q3 will be the biggest pull forward in Tesla history, right? Car sales will be the worst in Q4 and Q1. Q4 is like seasonally still good, but you just pulled all that forward to Q3. And then Q1, you're going to have to start slashing prices. So hopefully they advertise more, but if they cut prices, Tesla will either or both cut prices or cut financing with specials. They should advertise that, as they have been. those specials. I personally prefer financing or lease deals for Tesla, and I think they do as well. Okay, and they should pitch those with ads. But also, you should have a huge advertising push, huge ad push for solar and battery in Q4, critical, because you want that 30% tax credit that's expiring. Okay, then longer term ad strat. I mean, things that I think most people don't think about when it comes to Tesla. First of all, the safety of FSD, most people don't understand it. Like, it took years for me to get my wife to like FSD, and now she loves it. Like, we don't want to buy a Sprinter van because it doesn't have FSD. No Sprinter because no FSD. Like, that's, the people can pitch this. Real people that you could get actors, you could get Sydney Sweeney. Dude, please, get Sweeney to say this. You know, hire Sweeney and go, you know, I've always liked this Mercedes, but I won't drive a car today unless it has boom boom full self-driving. That's all you need, dude. Stock 10x, man. Like, it's not that hard. Like, there are so many great things you could do with advertising. Or like put Sydney Sweeney, or like film the ads in robotaxis. Film the ads in robotaxis, please. Like, have somebody sitting in the back of a robotaxi or the passenger seat of a robotaxi. When I send my kids to school, I want them to be safe. And then like the camera pans and nobody's in the driver's seat. And then you're like, that's why I trust Tesla robotaxis. By the way, did you know you could get the same technology in your very own car to keep your family safe? FSD. You know, whatever. And then you get into like a financing special on the Tesla or whatever. Like, come on, man. There's so much we could do here, okay? That's just on FSD. But not just that. I mean, crash tests, right? Crash testing, huge, right? The results that we have for this. The software updates. You have to realize, I bitched on Twitter because, and I only bitched because I want to help, but I complained on Twitter about why we don't have like a button basically to turn off all of the energy draining things when we park our car at an airport and we go on a trip like to Japan. And then Elon releases it in a software update like 2 weeks later. I'm like, man, daddy's back. Hats off to you, Elon. I love that. Daddy's back. That also happens to be the coupon code expiring tomorrow, which gives you that technical analysis on trades. Not only trades that we're setting up for, price targets we've got for the end of the year, our 10 stocks to buy over the next 10 years, also stocks to buy maybe over the next 6 months as a trade. We got a couple over the last 3 days. We've been looking at a couple stocks that were like technically good, fundamentally cheap, upside catalysts in the near term. So the technicals and fundamentals looking really good for the next 6 months on a couple of these. It's really exciting. So be part of that Meet Kevin membership. But anyway, the software update aspect, like advertise this. You know, when we get so many software updates for these Teslas, they're fun. Like now we get the color that changes with the color album of our songs or the beat of music. Free software update. Freaking amazing feature. I love it. Love my Cybertruck. I do wish they had a van so I could put all my family in it. I wouldn't need a Sprinter van. And this is why I wish Tesla would get into making more models. I like models. Love models. We need more models. But anyway, I am so glad to hear Ed Ludlow say that we're seeing positive ROI on advertising because we knew it would work, because the Tesla product is good. You're just enhancing a great product with little reminders and prods. So when we look at these fundamentals, I want you to understand this. If Tesla X credits is at 15%, we're gonna have amazing numbers here, okay? Let's go pick our Q4 numbers. We're gonna have 20 bill of auto revenues, okay? 20 bill auto revenues, okay? Let's take 15% of that. So 20,000 million times, or I guess that's K actually. Right? Yeah, this is K. Wait, no, it's in millions. Is it in millions? Or, you know what I mean. 20 bill in auto revs, okay? 20 bill in auto revs times 1.5. We're looking at 3 bill $3 billion gross margin at 15%, okay? How much are we really spending on advertising? Not that much. Go look in here. We're probably spending on SG&A. We are probably spending, some of that SG&A is obviously, I think the G&A part's going down. I would guess G&A is going down and S is going up. So let's say G&A is going down by 5%. And the delta here was 6.9, I think. 1366 divided by 1277. Yeah, 6.9. So call it a 12% increase in advertising or G&A for advertising. I'll take 1366 times 1.2 is 150 million bucks. Dude, dirt cheap. You won't even notice it, you know? If you took 150 to 300 mil for ads, IMO, you can soften the Q4, Q1 hurt, and it barely moves your margin because you're moving margin to the tune of, I mean, let's see, if I go to 20 times, 14%, I'm at 200 mil. So it's like a 1% hit to margin, 1% effective hit to gross margin. Who cares if it means you're getting the volume, right? And that's the other thing. 1% hit to gross margin would be, call it 200 mil of ads. Sponsor people like Sweeney or whatever. You don't have to sponsor the shills because they're already like all in Tesla, right? But get some of these you gotta go mainstream. Like Elon said, he's preaching to the choir when he talks to Tesla fanboys and fangirls. You gotta get that mainstream audience, the senior citizens, the moms. That's what you gotta target. If you can get those people through sponsorship, that's the game changer for Tesla, because now you can maintain volumes while you're trying to get to the FSD transition, and you actually follow through with the plan, Elon's next master plan, and his stock comp plan of actually delivering the vehicles that he wants and that Tesla needs. That helps you get through Q4, Q1. So that's bullish. So now I do think you'll have, near-term pain around these numbers. Like, honestly, the numbers that we get in January and April, they're probably going to suck. And a recession, obviously, would suck as well. But coming out of Q1, Q2 could be a low that you could buy the dip on. If we go into a recession, combined with Q1, Q2 dip, you'll have a glorious dip. But coming out of that, you will have the most glorious buying opportunity for Tesla, because in the next 10 years, these are the best cars that exist. I have no doubt about that. I have my doubts, let me rephrase that. I had my doubts about Robotaxi. Had. Now, why do I say had? Did I just, flip-flop on my opinion on Robotaxi? No. In fact, if you go look at this, Robotaxi Meet Kevin, go look it up. The Tesla Robotaxi. This changes everything. And I did a full breakdown, my exposure is a little high here. I did a full breakdown of my tour with the Tesla Robotaxi and how impressed I was with it. And how this was a game changer for the stock. Over the last month, you'd been up 30, 40% on Tesla stock. And we talked, I broke this down in person. I flew to Austin, Texas, and Ellie was so nice, a shout out to her, for letting me get in on the ride. But I was really impressed with this. This was very, very good. So, hey, any crap in the short term, like Tesla is listening. And that's why I say daddy's back. Not only because, actually that's what the coupon code's inspired by, is that Elon's back at Tesla. So yeah, what happens when Elon goes back to Tesla? Dude, heads fly. When Elon goes back to his company, heads fly. And the information likes to shit on Elon every damn day, it feels like. Like, I'm pretty sure here, XAI broke safety policy with coding model. Who cares? There was another piece in here yesterday about like the people, like these head people flocking or like leaving Elon or whatever, and a bunch, like how there's an exodus at Elon related companies. Who cares? This was actually very interesting. This piece right here, the Sunrun and Tesla battery partnership, how basically we can utilize batteries to offset pain from the AI grid, or AI taking over our grid and overrunning our grid, and we could soften the load or distribute the load more evenly. Brilliant. This is why I'm a shill for the batteries. I kid you not, I have on my phone right now, on my tabs, an $83,000 Tesla solar project because I want to hit buy on it because I think it's going to be like an 18% return on where we run our servers for HouseHack. Tesla, big fan. And the 30% tax credit expires at the end of the year. So it's a huge game changer. But seeing where they're going with Robotaxi, it's going to take time. Where they're going with advertising, they're listening, and the product, they're listening. It's just a matter of them introducing a new model, and they've listened to everything that their community has suggested. This is a smart business. I'm excited about this. Again, recession, you will have the most glorious buying opportunity to buy Tesla. But then rates will plummet, and it'll come back. No recession? Yeah, the Q4, the next earnings should be fine. Q4, Q1 are going to suck a little bit with deliveries, but that's okay. Hopefully by then we have some more good news on progress on AI and robotaxis and that. So I'm excited. This is very good. So good job, Tesla. And again, like this near-term dip, I get it. That doesn't make me bearish on the stock long-term. We literally wrote this down in the Alpha report. And we talked about it this morning on the live stream. We literally said there will be traders profit taking. Because there are people who buy Tesla stock for the short-term momentum, and then they leave. They're fair weather friends. They come and they go. The trade aspect here is always going to be down on buy the rumor, sell the news stuff. But the long-term here, and I don't love the valuation where it is right now. Let's be real about that, okay? Let's do a little valuation update. I've been giving you my unvarnished opinions around Tesla stock since like 2017. So I haven't gone anywhere. But let's look at the valuation because the valuation is cooked right now. So, I give you the exciting fundamental talk. Now let's actually look at the valuation because it's depressing. So valuation, I have 1.75 of earnings at 445. 445 divided by 1.75. It's 254 times on a PE ratio, which is maddening. The forecast for EPS growth, though, honestly, it keeps going up at Wall Street. 40.39. Come on, 40.39 plus 40.39 plus 37.04 plus 34.88 plus 48.24 divided by 4. 40. It's still 40. This is pretty impressive. 40% EPS growth. But 252 divided by 40, bro, it's a 6.3 peg. The multiple right now is insane. Okay? We should be at, I'll give them a services valuation of 2.67 times 1.75 times 40. 186 on a services valuation. That means the difference, this extra like $200, $300 here is hype and momentum, excitement about the future. The market only goes up, it can't go down. It's fine. Like it's the same thing with Nvidia. Okay, I've got millions of dollars in Nvidia shares. And every day I'm like, I can't justify buying it at these levels. I'm so excited about what NVIDIA is doing. NVIDIA is going to be the one company that gives Tesla a run for its money on FSD because their ADAS software is very, very good. And it allows this, not open source, but nearly open source licensing for ADAS because even though you license it, so it's not open source free, it's basically available to anyone. So I call it open source-ish. But that's a big deal because that's going to be competition to Tesla for FSD in the long term. And so NVIDIA, like people don't even price that in for NVIDIA. I'm so excited about this. I wake up every day and I'm like, oh my gosh, I'm making more money on NVIDIA. I'm doing nothing. But I just can't buy them at some of these valuations. Although NVIDIA's valuation isn't even multiple-wise anything close to Tesla's. That's something else that's wild. So look at the valuation for NVIDIA right now. You know, a $4 billion company versus Tesla. Tesla's valuation right now is $1.4 trillion. NVIDIA is sitting at a valuation of, what do we have here? $4.6 trillion. But, you know, you go into the NVIDIA earnings over here. we've got revenues of $46 billion. We've got net income before taxes of $31 billion. The margins are insane. And because the margins at NVIDIA are so high, Tesla's bringing, 7 to 10% to the bottom line. NVIDIA, they're bringing 50% or more of their revenues to the bottom line. That's what's helping NVIDIA keep their valuation lower. So NVIDIA at 4.51, 189 divided by 4.51, I've got them at 41.9 times. And EPS growth for NVIDIA right now, let's calculate it. So 41.9, call it 42. 42, 15.4, 11.9, 11.16 divided by 4, 20. 41 divided by 20.1. They're trading for a 2-peg, dude. 2-peg! They should be at a 269. So 269 times 451, come on, or 267, 451 times the growth rate. This should be a $240 stock on NVIDIA. So, NVIDIA is trading at a massive discount for this innovation future relative to earnings. Part of this is because we just get so enamored with Elon. It's like, this is again why I say daddy's back. Coupon code expiring tomorrow. Where, not only are you getting fundamental analysis, the next 10 stocks to buy, but you will also get my promise of when I sell NVIDIA, you are going to get the alert of when I sell NVIDIA and I dump that thing like a hot freaking potato. I cannot wait to dump it. But in the meantime, I'm just milking money on a daily basis, and I freaking love it. Anyway, go check that out over at mekevin.com. You get all the courses, all 8 courses, the future lectures that are coming out. You get a potentially tax deductibility on the course. And use coupon code DaddySmack. Some of y'all are asking me about the leasing plan that Tesla is offering for the Tesla solar panels. What I did is I threw in an example of a pricing setup here where we could pay cash for this system at $84,000, which is quite a bit. That's a 24.6 kW system. Honestly, I don't even think we could fit that many panels, but I just overpriced it right now just to see the numbers. Because we've got about $1,000 electricity bill per month where we're running our AI servers for HouseHack, and it's expensive. So we're looking at like, all right, well, cool. I mean, if we could save, even call it $10,000 a year, because you don't necessarily want to zero out. Zeroing out usually isn't a good ROI, but if we could save $10,000 a year, that's a nice ROI. I mean, 10 divided by 84. Mind you, we get the tax credit on top of that. So it's actually 84 times 0.7, be about 58. So 10 divided by 58.8, that's a 17% return on investment, right? Like, that's sexy. That's really nice. So the question is like, okay, well, what do I think about the lease? So here's the problem with the lease, okay? The number one problem that comes up with the lease is people get themselves into these leases and then they want to sell and they want to move. And you know what happens? Every damn time, the sellers are like, oh, well, the buyer should just take over the lease. And the buyers are like, double bird, bro, pay it off. So then you get suckered into paying the interest rate on the lease, which is built in, for 3, 4, 5 years, and then paying full pop of the contract value, we don't know what that price is going to be, for your solar panels after 5 years. After 5 years, your system's not new anymore. But Tesla determines what the price is on this option to buy. And they don't tell you what the price is up front. They tell you it'll be in the contract. So you really have to get pretty damn deep committed to this, and then they'll give you the buyout price. I don't love that because I'm basically making half of the payment I would have been making to the utility to Tesla, and I still don't own the damn system. And it's a lease, so it's not like I'm making any principal payments towards the actual system. So I get it. And I have a 10 or a 3% increase in the annual cost of my electricity. Now I understand people are like, oh, but your electricity cost might go up. That's a sales pitch. We don't know that. That may not be a foregone conclusion. That's what people are pitching today. But understand, what's going on with the input costs, which is mostly like coal or oil or natural gas. The input costs of our energy is actually kind of going down. I mean, look at the last 5 years on oil prices. You know, it's been going straight down because we're producing more. So, you know, that does not necessarily mean electricity prices are going to come down, because I get it, the whole AI build out and all that stuff. But that's the great sales pitch. So I actually think this is great for Tesla, because Tesla gets immediate ROI on panels and batteries, and they get to increase the amount of gigawatts deployed. This is very, very bullish Tesla. This lease function, brilliant for Tesla. But I don't like it for the user. Number one, if you go to sell, you're screwed. You're gonna hate it. Now, a lot of you are gonna be like, I'm not gonna move for the next 5 years anyway. That's what everybody always says. And then they end up moving after 5 years. It's not just sales issues though. It could create refinancing issues. Because if they put this lease, which they probably will, as a debt on your property, you know, basically secure the lease contract via UCC or whatever against your property, that's gonna suck. And I don't think you're gonna get a great price after 5 years. Like, you're not gonna get a big discount. So I kind of think you're throwing money in the toilet doing the leasing option. I'm not the biggest fan of the leasing option. Let me compare it to financing. I could be wrong here. They write the lease term, dude, for 25 years. Like, you're basically just forever leasing it unless you pay it off. Again, at 3% of an escalator, bro, you know, before I know it, I mean, my lease is gonna start at 470. 470 times 1.3, 1.3, 1.3, 1.3, 1.3, 1.3, 7, 8, 9, 10. If I did that right, I'm at $613 after 10 years at, you know, at a 3% escalator. And that's, you know, that is compounded. You know, my bill's going up $150 after 10 years. So it's like, I don't know, is my usage gonna go up? Is the utility rate going to go up that much? Natural gas prices have come down over the last year. I don't know. I don't know that it's, I also think we're overbuilding electricity infrastructure because of the AI boom, which could actually lead to massive deflation in energy prices. So if you have deflation in energy prices, you're screwed in a solar lease. If you have to move, you're screwed. If you want to refinance, you have risks. The buyout option is probably clickbait. All of those four things make me nervous about the lease. If I go to finance it, you know, the financing rates at 7.24% is too high. Now, the financing rates are written at 18 months. Wow, dude, 18 months, that's 15 years. 15 years, that's bad too. So I kind of think like you're either going home equity line of credit or you're going, or just don't do it. So it's HELOC, cash, or don't do it. That's my take. Now, 99% of people are gonna hear me say that and they're still gonna get the lease, in my opinion, which is honestly the most bullish thing possible for Tesla. The lease is a great deal for Tesla. A brilliant deal for Tesla, because you can lock in that 30% tax credit basically in their pricing, and their energy installs are gonna skyrocket because of this lease thing. I just think financially, it's not my favorite, especially because I don't know this, but I wonder if it'll also show up as a debt on your credit. I don't know that it will, but it's technically a debt that's gonna show up on title searches, I believe, fact check that. And if lenders start counting that against my debt and hurt my ability to qualify for rental properties because I have this solar lease, bro, I'm gonna be pissed. So from a financial like advice point of view, not personalized financial advice, because I don't know your situation, but sort of broad financial advice point of view, don't love it. From a Tesla investor point of view, yeah, baby. So there's an answer to your question. Thanks for asking it.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.